Welcome back to Your Real Estate Voice with Barb Schlinker. This is the weekly radio show that informs and educates you on how to buy or sell real estate with Barb Schlinker. She's the host of the program and the owner broker of Your Home Sold Guaranteed Realty. Now, Barb, of the many emotional and financial challenges with a divorce, dealing with the real estate part of it can be very daunting. What are the things that homeowners need to know about the house, the mortgage, and taxes when they're facing a divorce?
Well, Richard, generally, if there's attorneys involved, they're going to create what they call a divorce decree, and it's going to lay out whatever the agreement is. Some parties both have an attorney, some of them are amicable and they don't have one at all. So it's fairly easy to get divorced in this state. From what I understand, we have something called no-fault divorces where they just split stuff in half, and you have like a 92-day cooling off period or whatever. But a lot of people think divorce is, very common, like half the marriages fail. And actually that's not true. Colorado divorce, a little bit on the high side, but 13 out of 1,000 file for divorce. Now, I don't know if that's annually or just in general. It's not as extreme as you would think. And it also said, and when I was doing the research, that 52% of people over 18 are married, which I thought that was good. That's a good thing. Yeah. So
that's good news.
Yeah, but generally when they sell a house, I see all kinds of things happen. Typically, a lot of times they'll bring in a real estate agent just to do an opinion of value, a market analysis, which is not a true appraisal. It's just an opinion based on what they're seeing in the market. And there's, forms that we could fill out and they could send that to their attorney. They could also hire an appraisal. Appraisers right now, appraisals are over $850. They used to be $350, but they've gone up, which they deserve that. It's hard work. I wouldn't want to do it. I mean, I do it for free for my clients all the time, but not at that level of detail. Those are 40-page documents, very intense. So sometimes lawyers are involved and sometimes they're not. Where it gets a little sticky is both parties have to agree on the one real estate agent that's going to handle the sale. So sometimes they don't agree on that, where I've recently sold one last month where the missus picked one agent and then she fired him and hired me and I got it sold. So that happens sometimes too. But generally the divorce decree is the document that establishes, okay, this is what we think the home will sell for. This is how the proceeds are going to be split at closing, right? And it goes from there. And so, but basically there's 4 basic options for the real estate when the marriage is splitting up. You could sell the house and divide the proceeds, or one party could buy the other out, like say, all right, we think it's worth this much, so I'll pay you whatever half of the equity and then I retain the house. And then, I had one actually that tried to do that. He was in the middle of a rehab, and for some reason, the attorneys wouldn't let him do it. So they had to sell basically to a fix and flip investor in order to have them finish the rehab, and then they'll get the proceeds. So that probably cost him more than what his original plan was. He actually wanted to buy them out, buy the wife out, but it didn't work out that way. And so if you have to sell and you want to buy another house, you can't always do same day closings from the sale to the purchase. We can make that happen, but you've got a lot of people in every real estate transaction. A lot of things can go wrong. Like the lender may not close on time. Like the attorney says, oh, no, we need this sorted out. I recently had one where the wife's attorney decided to capture all of the net proceeds, and the attorney was involved with paying down the credit cards that they each owed balances on. And, if you have title companies do that, they're very fast and efficient. They do it out of the closing, the money goes out, you have all kinds of documentation, but not so much when it comes to attorneys doing it. So This particular attorney, it took her over a week to get her hands on the net proceeds because she didn't give the right wire instructions. And then when they sent the checks out to pay these bills down, she didn't put the account number. So these credit card companies sent the check back going, we don't know what account this is for. So here we are a month after that closing, where this should have been done within a week or two at the most. And these bills are not paid off, and the attorney still has some of the money. So I don't advise that. I think it's a really bad idea because the title companies are very fast and efficient at doing this, and they don't charge anything for it, which is probably most important. It would cost you less if you have to have certain bills paid off out of the closing. Now, how do you figure out what a home is worth, whether you plan to split it, buy each other out, whatever it is? You can have an agent to do it. We help clients give them an opinion of value all the time. A lot of times they'll get several opinions. I had one customer that his side got an appraisal, the wife's side got an appraisal, then I gave an opinion of value, and they had to basically make a decision on these facts. But then you got to figure out, okay, if you're going to go buy another house, how much house can I afford? There's a really good resource that you can get online. It's called Bank Rate Mortgage Calculated. I'm sorry, Bank Rate Mortgage Calculator. If you just Google bankrate.com, it's one word, bankrate.com, and then look for the link that says mortgage calculator, you can click in there, kind of guess at your price, put in your down payment. It's going to default to whatever the current interest rates are. It will default to kind of a high property tax number and kind of low on the homeowner's insurance. So make those kind of even, just to get a rough idea on what that payment is. Another general rule of thumb for how much you can afford is most lenders will approve you for up to probably about 38% of your gross monthly income before they take taxes out, can be in the form of debt. That includes house payment, car payment, and credit card payments. So if you know what that number is, just figure 40%, just to be even. 40% of your gross monthly income gives you a qualification number, and you can go from there. All right, so how do you be prepared to move to your next house? Right now, the average days on market in this area are exceeding 120 days. So where does that number come from? Average days on market is calculated based on the average of the homes that are getting contracts, not the ones that are not getting contracts. And right now, only 1 out of 3 homes are getting contracts every month. And, you know, a lot of people think, oh, I can go up on Zillow and Zillow tells me my house is worth X. Well, the problem is Zillow is giving out fake news. What they're telling you is your home is worth the average of what the other available homes are around you, most of which are not selling. So it's not good information. You really need somebody that understands the market, that sells in the market, to give you a really good opinion of value. And the other thing too is when you, let's say you plan to buy another house after this one sells, and you're under contract. So that's good. You're most of the way there if you're under contract. However, the buyer's going to do an inspection. They're going to do an appraisal. They're going to go through loan approval. They might need to get documents that they're not very fast on. I've got one closing this week that should have closed last month, right? So there could be delays. Also, there's a whole bunch of opportunities for the buyers to bail out pretty far into the process. So I'm not sure I would jump on another house unless you know for sure the deal is solid rock firm, or you can qualify for it without selling your current home. And if it does sell in time, that's great. Then, you know, you're just in good shape there. So if you get your offer accepted, before you go out and actually make offers on homes, we always highly recommend that buyers get their lending pre-approved. Don't just throw out offers and hope it's going to work out. Because here's the thing. first of all, it's a waste of everybody's time to go look at homes you can't afford. And some people like to put the cart before the horse. I see it all the time in the car business where they go look at the car, they love the car, they want to buy the car. Okay, how do I buy the car? Right. And they may not qualify. So you want that done. It only takes a few minutes on the phone and a little bit of paperwork here and there. And it's like shopping with cash. So if you get that done, that's the best scenario. And make sure you hire an agent that really knows how to put protections in place when you do make an offer. Let's say your house sale falls apart. You don't want to have to lose your earnest deposit just because something like that takes place. So my name is Barb Schlinker. I'm the broker owner of Your Home Sold Guaranteed Realty and the host of this show. And what we're talking about is how divorce affects your house, your mortgage, and taxes. And when we come back, we're going to cover the mortgage payoff and how that works. Also, property taxes. And if you are thinking of making a move, I help people sell homes all the time that are facing divorce. You don't necessarily have to be in the same room if you don't get along. You could close at different times. We've got all kinds of solutions. So give us a call at 719-301-3900 or go to barbhasthebuyers.com. Richard?
You're listening to Your Real Estate Voice with Barb Schlinker of Your Home Sold Guaranteed Realty. If you're interested in selling your home and want to get in touch with Barb, the number is 719-301-3900. And we're talking, Barb, about divorce and how it could affect your house mortgage, taxes, and all of the rest. Barb, let us know.
Well, let's talk about the mortgage because I get interesting questions all the time, and I like this question because I could see their line of thinking, where a lot of people will say, "Well, we're getting the divorce. Do we need to refinance the mortgage first?" And the answer is no. It's just a lien on the house. So if you plan to sell the house and split the proceeds, basically that lien gets paid off, and you guys are paid off and clear of that mortgage. The only time where a refinance might be necessary is if one of the spouses plans to keep the home, and then the other may require a refinance, because if that payment doesn't get made, it affects the other person's credit, right? So that would be the only situation where I'd say you'd have to worry about that. And as far as holding title, as an example, most couples hold title together. So what that means is they both must sign for the sale and accept the contract. But there are times when one or the other party is solely in title, but they are married. And there's nothing wrong with that. Well, sometimes that happens if one party or the other, when they purchased the home, had a little better credit score, or they were the main income earner. And so therefore, two of them were not entitled. But in Colorado law, you still have to split the proceeds. So it's whatever the divorce decree says has priority. And in either case, the mortgage gets paid off. And then the last item really is property tax. If you have lived in the home and you currently are married, or you were married in the last couple of years, you can profit as much as $500,000 tax-free. Now, if you turned it into a rental property in the last 2 years, or more than the last 2 years, then you may have to worry about a capital gain expense the year after you sell that property. That doesn't happen very often. Most of the time, they're splitting up a home that they live in together. But you definitely want to talk to your tax professional about this. I'm not a tax professional. I'm just a real estate broker, but I definitely would look into that if you think that's going to be a problem. And if you are thinking of making a move, give us a call, 719-301-3900, or go to barbhasthebuyers.com. Richard?
You're listening to Your Real Estate Voice with Barb Schlinker of Your Home Sold Guaranteed Realty. If you're thinking of making a move, call Barb at 719-301-3900 or visit barbhasthebuyers.com. Or if you want that free report, Divorce and Your Home, What You Need to Know, go to barbhasthebuyers.com, go to the free reports, and download any of Barb's free reports, including divorce. When we come back, we'll be discussing selling a rental home, how to handle the issues, and keep your sanity. Barb will tell you that when we come back.